I'll tell you the one thing that I'm enthused about is it looks like right now we're annualized at about 400 billion that goes right into our treasury. It's the first move I've seen any government take in reducing the debt.
Well, it's almost like you rob Peter to pay Paul, right? We lowered the corporate tax rate over here, but then we had tariffs over here, which is obviously a tax that the companies pay when the goods come into the country, which is fine, right? I mean, at the end of the day, we need to pay the deficit down. So I'm with you on that. I think that is one of the positives that probably doesn't get accentuated enough. But it is kind of remarkable, right? We go back 3-4 months in April, and everyone on the street, the professionals on the street, we use that quotes, were calling for recession. Tariffs are bad. They're inflationary, which I still think they might be inflationary. But so far, so good, right? The economy hasn't fallen
Well,
off the
first of all,
cliff.
Ryan, and Chris, I think you'll agree with this. Depends on which channel's economists you were watching. You know,
That's actually not true. It didn't matter which one you were watching. Every economist was pretty sour on the market back in April.
I agree. The market's doing great, but I don't like these tariffs. I mean, I'm not going to tell you how much money I just paid in tariffs because all the equipment for my sailboat comes from the Netherlands, and that's all taxed at 15%. So,
well, Chris, we've been telling you to buy American all year, so this is on you.
Right, because we build so much here in America. That's part of the problem.
yeah, Ryan should start a new sale. Ryan should make sales.
Well, Chris, shame on you for having an expensive habit. And well, I think the point is, though, did you pay the tariff?
Yes, I did.
Okay, so we're paying
Yep.
Chris too much, Bob, is the point here. But it also brings up another point. If you look at wages right now, they are growing over inflation. They really have for the last 2 years. So there is an argument to be made here, and I don't want to see what you think about this, Bob, that because wages are growing over inflation, if tariffs are inflationary, which is possible, and the prices go up, consumers will actually eat that higher cost. What are your thoughts on that?
Well, so far that's been the case. So we've had wages rising right along with inflation. We haven't seen any negative or positive impact on inflation with the tariffs, but of course, inflation's a lagging indicator, and it's going to take a while for these things to work their way through the system. But there's no mistaking the fact that a tariff is a tax, and somebody's got to pay it, and ultimately, it's going to be the consumer. So I know that companies are scrambling to absorb some, get their vendors to absorb some, but ultimately, it's the consumer going to pay for it, and you're starting to see it in some places like a coffee shop. You're starting to see coffee prices go up, but that's not just tariffs. That's other reasons.
Plus, one of the things we haven't talked about is the fact that, part of these negotiations, particularly with the European Union, they've committed to 710. Was it 710 billion?
I think it's over $1 trillion. Excuse me, over $1 billion altogether. Correct?
Well, they're buying 750 billion of U.S. energy,
Right, but another like 600 billion on top of that. Correct?
600 billion, yeah, invested. But that's again, nothing's in writing. This is all just agreed.
I think that actually, and it's supposed to be over time, so you can probably take all those commitments to buy American products with a grain of salt. Is my opinion. I think sounds great, sounds like wonderful. When we have the trumpets are sounding, and President Trump comes out saying what a magnificent deal it is. But I think that component of these deals probably isn't that real. But what is real is money is coming to the Treasury's coffers, and that pays down the deficit. To your point, Bob, and I think that is a big deal. But I think the big question here is, and my provocative take is, we're going to see inflation. It's a delayed reaction to your point, Bob, but it's going to happen at some point down the line, and no one's talking about that.
Right. I think it's funny that you assume that money's going to go to the Treasury's coffers and pay down the debt. If I know the American government like I think I do, I have a funny feeling that we're going to see more debt as the future goes on.
Come on, Trump's got his new plane from Qatar. I mean, he's good. He doesn't need to spend any more of the public's money. But no, I think the bottom line is, I think what Bob you said is absolutely correct here. I think tariffs are a delay, or inflation from tariffs is a delay, and there is going to be a point here in the near future, where we're going to see that uptick in inflation. And I think everyone's kind of getting lulled to sleep right now.
But I also think that the U.S. government, and more specifically the Fed, is not discounting that. That's shown by the fact that the Fed hasn't lowered rates yet, and they haven't committed to a point in time when they are going to lower rates.
Well, the Fed can't lower rates here. I mean, first of all, we have interest rates that are at normal levels, right? We're at normal levels with interest rates, and the inflation number, arguably, it is at the Fed's target if you take out rents. And so, they could make a case for that. But the Federal Reserve's job is not to do the bidding of the president of the United States. So, fortunately, unfortunately, Trump grew up as a developer, and all developers want to do is, borrow at lower rates. I mean, it's just not the way the rest of the economy works. And if we have another big blow up, which we will have, some kind of bubble burst or some kind of black swan event, Fed's got to have the ability to come to the rescue by lowering rates. You lower it now, I think it's risky.
All right, Bob, if you're a betting man, so what I'm hearing you say here is the Fed will not cut come September, but the market's saying it's 60% odds that the Fed's going to cut in September. You're betting against it, is what I'm hearing.
I'm not making any bets. I'm just stating the fact.
I want your opinion, Bob.
We don't need the lower rates here. And I think it'll be really interesting Wednesday to hear what the Fed has to say, specifically Jerome Powell. I think he will be more dovish in his comments. I think he's, caving to the pressure a little bit.
Yeah.
But that doesn't necessarily mean they're going to cut in September. And then you're here. For me, I'm telling you, you don't need to cut. And be careful what you wish for. We cut 100 basis points and the interest rates went up. So, every contractor, every developer, everybody who's looking to buy a home has been asking me every day, Bob, is Fed going to cut? Is only going to be able to borrow more cheaply? The Fed cuts, you may be paying more.
I think you're absolutely right, Bob. But Chris, I think Bob is like a great politician. He didn't answer the question. He said he thinks the Fed shouldn't cut rates, but you didn't tell me, do you think you think they shouldn't cut rates, but what do you think is going to actually happen? That's what Chris and I want to know.
Well, I think the Fed may actually increase rates.
No way.
Nobody's talking about that, right?
Nobody's talking about that. I think that's completely out of the question.
I think you can make a case for them increasing rates just as much as you can for lowering rates right now.
Yeah, but the problem is inflation has kind of been benign, right? It's kind of stuck in the same place. So it really hasn't gone down much, hasn't gone up much, which I would say constitutes maybe a hold here. But Bob, I'd actually take the over-under on that. Is that how you say that correctly? I actually think the Fed will cut in September because of political pressure. I think at this point, Jay Powell has said that, look, if we have full employment, which we have, right? Unemployment, the number comes out on Friday, I believe. We should be at 4.1, 4.2%. That's a 50-year low in unemployment. And prices are relatively stable. Inflation's come down a lot. So unless we see a big uptick in inflation in the next month, which I don't think we will, I really think he's going to cut come September. I'll take the other side of that bet, Bob.
I think Trump really got him when he called him out on the over budget on the renovations of the Fed buildings.
I don't think he did.
Except for the one building was finished 5 years ago.
Yeah.
Yeah.